Good morning. My name is Ryan Littlestone from forexflow.live. Welcome to a new week. We've had a week, the first week of the new year has been a bit of a week of discovery to seeing what themes are going to come out to play. As I spoke about last week, there are some levels in play at the moment. We just want to see what direction the market wants to take. We had a fairly choppy week, if you like, last week. Market's not really knowing what to do, but the thing that sort of came out at the end of the week is that the market is beginning to build on the inflation bandwagon, particularly for the US, and what that might mean for monetary policy. One of the things we're looking at is bond yields on that, and they made the 1% break that people have been looking at. They pushed up. The dollar has largely gone with it. Now, this is something that I've been speaking about for quite a while, and one of the pairs we're looking at is dollar yen. And we start by looking at the dollar yen daily chart. And what we can see here is we can see the downtrend. I spoke about this last week. We've got a downtrend. We've had it in all year. It's been in there in place for longer. But for most of last year, we've seen this steady downtrend going on. And there's a danger here that it breaks, and we potentially could see a reversal of some sort. Now, we got the break in bonds last week, as I say, and that's pushed up to the 1.12, 1.11 area. We're going to need to see if it carries on. Because what this might still just be some New Year ruminations, if you like, of people just positioning around the early part of the new year. But if this inflation theme and if this questioning of the central bank is going to continue, this is something that's potentially going to snowball into something that's much bigger, because this is the sort of thing where trends start. It's okay at the start of the new year, something like that, looking at it and saying, oh yeah, this is the beginning of the trend, but you don't really know whether it's beginning of the trend until you're maybe 2, 3, 4 weeks down the line and the moves have continued. At that point, you can be 700 pips away, and then you're thinking it's a trend. So as per last week, what I'm looking at on this chart here, this daily chart, is this trend line that comes in from around the June area. It tells a story pretty well, that downtrend through the latter part of the last year. And it's a key measure of whether we are going to see a change of trend. If we get above this line, it potentially changes the picture, at least for the short term. Now, it's not going to be the end of the story, because above there we've got more resistance. You can see the 100 DMA in blue there. But if we switch to another chart, and this one's the cloud chart, which is a very much watched chart in Japan, we can see that the bottom of this cloud comes in at around the 104.30 mark. Again, this is another area that we need to look for changes of trends, for changes of direction. When looking at the text, you want to see the breaks of this long-term tech levels. If you start to see those break, then it's changing the picture. So what I'm looking for here is to see whether what we've seen last week and this inflation trade, if you want to call it that, is going to continue. If it's going to continue, the markers are there on the chart. We look at these trend lines, we look at these things like the clouds. If they start breaking, then we've potentially got a change in trend. Now, this is something I've been looking at for quite some while. I've been looking back at it since at least last September, because I feel that this year is going to be a situation where central banks perhaps are going to get caught out by inflation. One of the reasons for that is because a lot of them think it isn't going to happen. I mean, the Feds are switching to their average inflation targeting, or whatever they call it, because they feel that they can let inflation overshoot to bring their the average up to their 2% mandate. I think they're going to get called out by that, because what happens if inflation shoots up to something like 4% and their average is still only at 1.5%? And it's maybe not so much what they'll do, it's what the market will think they'll have to do. And that's what we trade when we trade in central banks. We don't really trade what inflation does and what central banks actually do. We trade the expectation of what they might do, because that is what drives the trends. So this is something I've been looking at since September, to see whether inflation comes in, to see whether the market is going to put the Fed to the test of whether they can handle higher inflation, and what happens if inflation rises above target, even if the average stays below. So early signs are saying to this week, I'm watching this trend line very carefully, currently around 104.20 in dollar yen. That's going to be the first key market. Get above there and hold above there, and we could have something different going on and a change in trend. As always, I wish you luck for this week, and we'll see you next week.